In the last video, we have discussed the theory of securitization. For the rest of this week's lectures, we will have a more detailed examination of securitization in the real estate market. First, we will be looking at mortgage-backed securities, or MBS. Traditionally, households approach depository lenders, such as local banks, to apply for mortgages to finance houses. Banks lend money to households through issuing mortgage loans and hold claims to the loans. The issued mortgage loans appear on the bank's balance sheet in the form of assets. In modern housing finance, banks' loans will be sold to a mortgage pool, and claims to mortgage pool will be used to back the issuance of mortgage-backed securities, or MBS. MBS will be sold to investors on capital markets. The proceeds from the investors eventually go to the households. After introducing securitization, we can see the modern way of housing finance is very different from the traditional way in that mortgage loans no longer stay on the balance sheet of the banks after being sold to a mortgage pool. This may encourage risk-taking in banks. The practice of securitizations started in year 1968 when the U.S. Congress decided to develop the secondary market for residential mortgages to promote home ownership. In that year, two government-sponsored entities, Fannie Mae and Ginnie Mae, were created, and 2 years later, Freddie Mac was created. Fannie Mae and Freddie Mac are quite operationally similar. They act as buyers of conforming mortgage loans, which are loans meet certain standards for securitization. Fannie Mae and Freddie Mac pool the loans and sell MBS to the capital markets. The next way to securitize is the Ginnie Mae channel. Different from Fannie Mae and Freddie Mac, Ginnie Mae does not purchase any loans. Its sole role is to provide external guarantee to MBS securitized by its approved private lending institutions. The last channel is called private conduit. In the private conduit, megabanks on Wall Street securitize loans that could not meet funding criteria of the above government-sponsored entities. These loans are called non-conforming loans and can further be classified into jumbo, Alt-A, and subprime categories according to the risk features of a loan. Subprime loans have the highest risk. MBS products made through a private conduit usually use senior subordinate cash flow waterfall structure to do credit enhancement. And the originating banks would usually retain a share of the subordinate portion as a way to promote risk sharing. Risks of MBS can be classified into two categories: prepayment risk and default risk. Mortgage borrowers have the option to either prepay or default on the principal and interest payment of their mortgages. Either situation would create uncertainty in cash flow to MBS investors. Mortgage borrowers are inclined to prepay the loans when market interest rate falls below their mortgage rates because they can refinance at lower rates. Mortgage borrowers are inclined to default when housing price falls sharply. For example, during the last financial crisis, because when the value of underlying property falls below the value of mortgage, borrowers can choose to forgo their properties. Next, we will have a further discussion on MBS in China. MBS in China has been privately securitized by commercial banks since year 2005. MBS securities are traded on an interbank bond market. The first MBS product of China was Jianyuan 2005-1 initiated by China Construction Bank. Due to the last subprime crisis, the country's experiment with MBS came to a halt until year 2010 when China Development Bank issued a second MBS, known as Kaiyuan 2010-1. Next, I would like to take the first MBS product of China, Jianyuan 2005-1, as an example to illustrate its securitization process. In the process of securitization, CITIC Trust was hired to set up a special purpose vehicle in the form of a trust, which is a SPT, to buy a pool of loans from China Construction Bank. Beneficial rights to the SPV were designed to have a senior and subordinate cash flow waterfall structure. The equity tier was repurchased by China Construction Bank to create risk sharing. MBS in the more senior tiers were sold to institutional investors in the capital markets. China International Capital Corp was hired as the underwriter of the selling process. In future operations, China Construction Bank also functioned as a servicer to collect principal and interest payments from households. The collected funds would be deposited to a custody account held by Industrial and Commercial Bank of China. The collected funds were to be distributed to MBS investors. Okay, in this video, we have discussed mortgage-backed securities. In our next video, we will continue with our examination of securitization in the real estate market by looking at REITs.